Good afternoon, everybody, and thanks for joining us. It's 2 o'clock, and it's time for the COPEC Daily Financial Webcast, of course. And again, we're delighted to have Marcia Strall with us today, and she's going to be talking about an important subject, which is using your long-term care insurance effectively. So for those just joining us, I want to take a few minutes. We do broadcast daily. We have about 35 speaking members of COPEC, and many of those we will have topics presented to you each day at 2 o'clock. We run from about 2 to 2:30. We'll keep the lines open if there's additional questions after that. And So without further ado, I'm going to bring back Marcia at this point. Marcia is the president of our own company, ElderLife Solutions. It's located in Dublin, but I know from experience that she deals with clients throughout Central Ohio, really throughout Ohio, and many clients throughout the country, actually. So she's quite a good resource for us. And Marcia, thanks for joining us again today.
You're welcome.
We're interested in this topic, so we'll let you kick it off and tell us what you're going to talk about today.
So today, I know that Jerry and his group are one of the groups that sell a lot of long-term care insurance, but usually when it comes time to really starting a claim, it can be daunting for folks and families. So today I'd like to talk a little bit about what to expect and how to effectively, when to start using it, when to call them, and the ins and outs a little bit of getting a claim going. So first thing I always tell clients is, typically people start, contact us, or if there are clients, and one of the questions we always ask is, do you have long-term care insurance? How long have you had it? When did you last update your numbers as far as your premiums, that type of thing? And a lot of folks will hand us a policy that they bought, 20 years ago, 15 years ago, and don't have the updated numbers. Maybe they've gotten notifications that their premiums are going up. They went ahead and paid the extra premium, but they have no idea what the policy is worth. So the first thing to do, if you're in a situation where you might need to start using that long-term care insurance for home health coming in, or for maybe short-term assisted living, or long-term assisted living, or nursing care, at that point, it's usually when someone's diagnosed or has some kind of medical crisis that they start looking at these policies. And I always start with saying, check and see what your elimination period is. Most policies have an elimination period. Some older policies, though, we have seen don't have an elimination period at all. And I don't know, Jerry, if they even sell those anymore. But we have seen them where there's no elimination period. But typically, it's usually 90 or 100 days. That kind of stems from the Medicare Part B that has 100 days of skilled care. The theory was you would get skilled care for 100 days and then this would kick in. Well, that's not the case anymore, but most of these policies have a 100-day elimination period. The thing to ask, too, is it 100 calendar days, or is it days of care? So if you come home from the hospital and you hire a caregiver, but you really only need them 3 days a week, is it just 3 days that week, or is it 7 calendar days? That makes a big difference if you're on a waiting period before they start paying. Some people might say, okay, we're going to start 5 days a week or 7 days a week just because we want to eliminate that elimination period quickly.
And Marcia, that makes a huge difference on the out-of-pocket cost for the client, right?
Huge.
It can be a big, big number.
Huge. And I think, sometimes people think, oh, I only need people, 2 days a week or 3 days a week. But in essence, they might need them and could use them for other things, like going to the grocery for them, or, caregivers in the home, the non-medical caregivers can do quite a bit for folks. And I think they need to realize that they really could use them at this point in time and then have it applied to the elimination days in their policy. Because otherwise, it's going to take forever if you're only using a caregiver 2 days a week to hit that 100 days.
And Marcia, you mentioned earlier, I think you said something like facility care, home care, skilled nursing. Do
Most,
all of
most
these
policies,
policies cover comprehensive, or are there some more limited, or?
most of them cover all of those three areas: home health, to get a non-skilled caregiver in, assisted living, or nursing home. Now, the reimbursement rate for policies is not always the same daily amount. Typically, when you start and get approved, you have a daily benefit, and sometimes you don't get as much for home health as you would for long-term care. So that's a question to ask, to get the updates on those. And usually they increase those every few years. So what you bought 15 years ago, you're probably going to have an increase in reimbursement, but you need to get those updated numbers and call to find out. The other thing is to check what are your daily benefits, because like we said, it can differ in some cases. And the other thing is the limits of the policy. What is the total dollar amount available? They can tell you that. You've been paying on this for years. So there are those totals. There's also those totals for how long you can use it. Sometimes there are restrictions that'll say, $300,000 for 3 years. Well, what does that mean? Do I have to, at 3 years, do I just lose the rest of my money? Those are questions to ask once you start looking at making a claim. And each policy is a little bit different depending on when you purchased it.
Now, on let's say the daily benefit, is that usually a flat amount, or are there?
Yeah, most daily benefits, depending, they range anywhere from 100. I'm going to say recently we've seen more of the 130, maybe higher, closer to 140 and up. Some policies, depending on what they've been paying in premiums and how they built the policies, can be $240 a day reimbursement. If you're in assisted living and it's costing you $4,000 a month, that's a big chunk. I mean, that you don't have to tap into your savings a whole lot. You can use that or the long-term care policy.
And so, is this based on like reimbursement of your actual expenses, or is it actually a definite flat?
Always reimbursement. You have to plan on paying, ahead of time. Then you submit the bills monthly. So when you're even in that elimination period, you're going to start submitting bills. If they approved your claim, you're going to start submitting those bills monthly so that they can start counting the days, and then they will start to reimburse you once you qualified for the elimination period. The same way in a facility, you may be in the facility for 3 months paying privately, and then it'll kick in where they'll start reimbursing you. But typically they work it out that you pay the bill, you send them a copy of the paid bill, or the facility sometimes will do that for you. And then they will reimburse directly into your checking account. So then it becomes, once you're qualified, it's money in, money out, or I should say money out and then money in.
Right. And if there's extra charges beyond the policy limits, then the client would take care of that person.
Correct.
Okay.
Correct. So qualifying, typically you have to qualify. Most policies use what they call, you have to have need of help in activities of daily living. Activities of daily living is bathing, continence, that means toilet, dressing, eating, toileting, and transferring. Eating is, or bathing is, are you able to go in, take a shower, come back out without the fear of falling, or your balance is impaired, or if it's a dementia patient that has cognition issues, do you need someone there to cue them on what to do? Okay, wash your hair, now it's time to wash. Maybe they can physically do these things, activities of daily living, but they can't do them without supervision. For supervision for safety, no, the water's too hot, you have to turn that down. For a dementia patient, sometimes they just don't know and need constant cueing to do it. Physically, they're able, but they can't cognitively do it safely. So that's another issue to think about. Most policies take into account cognition. So even if you think, oh, this person that, my wife can go ahead and she can still bathe herself, she can take herself to the toilet, Yeah, she has a couple accidents, but boy, I worry about her balance, and she won't use her walker. So she's fallen, 4 times this week, that type of thing. Those are all red flags that it's time to start the policy. I think the biggest thing we see as care managers is people want to wait. It's like they think of it as money in the bank. And it's really not, because you can, if you've paid on this for 10, 15 years, you're looking at, hundreds of thousands of dollars in benefits that you leave on the table, and those can't be given. Typically, depending on the policy, you can't take that with you when you die or give it to your kids. So you need to use it. You can go start using a policy, qualify for it, and maybe you get better in a couple, 6 months or a year. You get stronger because you have help in the home and you don't need the caregivers as much. You can go off that policy again. Usually when you're qualified and you're approved on the policy, they don't charge you your premiums. Most long-term care companies do not charge your premiums while you are actively approved on a policy. But if you would come off the policy and stop using it, yes, then you would have to start paying your premiums again.
And Marcia, you might have mentioned this, but of the activity daily living, how many of those do you need to satisfy before the policy pays?
Usually you need help with 3. And like I said, it doesn't mean that someone has to physically get it, reach in the shower and bathe you. It can be something as simple as making sure they're standing by so they don't fall, that you're right there if they need assistance. And also in assisted living, it's the same thing. What you have to rely on there is the plan of care that was written in the assisted livings for the amount of care you need includes help in those areas. And that's important because a lot of assisted livings use these numerical systems, oh, she's a 1, she's a 4, whatever it might be. But if they don't have you high enough as far as your care level, you're not going to qualify for the long-term care. So we always kind of go to bat and tell the family or tell the facility if they are using us to help start this plan to get things rolling, that, hey, we need to review your plan of care to make sure that in your activities of daily living section that you have that coded correctly so that the insurance company will start paying on the daily rate.
Right. Well, there's a lot of moving parts to these plans. I know that myself. And what I was kind of curious about is the period of coverage. A lot of them want you to pick up, how long do you want this policy to pay? Do you have a particular opinion on that, or what you like to see with the client?
Well, I think, it depends on the policy. If it's written, if people are saying, I'm never leaving my home, they're going to carry my dead body out on a slab, and I want to be heavy on home health. So people live at home for a good long time if they can afford it, and long-term care insurance, if you're heavy on that particular reimbursement, that's the way to go. But if someone realizes that, hey, if I have a stroke, perhaps I can transfer okay, maybe not safely, but I could go to an assisted living level of care if I can still transfer pretty well, and live in a pleasant apartment with my own bathroom and that type of thing. And if that's kind of the scenario you see yourself, 5 years is kind of the max, the industry standard for, it used to be 3 years in assisted living. It's more edging toward the 5 years because they bring in higher levels of care. So I would say 3 to 5 years is typically the industry standard.
Another benefit I wanted us to talk about is the inflation benefit on these policies. Can you comment your experience on that?
I think what I see mostly is when people first build these policies, if you go for the higher percentage and start, typically, you would want to see somebody get into these policies in their 60s. If they wait till they're in their 70s or 80s, they stand a chance, especially lately. I don't know if your experience is that, Jerry, but the qualifications to, as far as getting in and them doing a background check on your health have been a little more aggressive. I read an article, and I don't know your experience, that if you've had COVID, that might stop someone from selling you a policy. I don't know if you've come across that, but certainly you want to really look at, you know, where you're at with things. And then if you build it at a higher percentage inflation, and if they come back and are going to raise your premium rates, maybe you can drop that down and keep your premium about the same. It gives you a little more flexibility.
I agree. I mean, the importance of that is pretty high, but it can be a very expensive part of the benefit. In terms of the premium, I've found the inflation benefit to be as high as 40 or 50% of the premium is for that inflation benefit. Another way to approach that is just to maybe buy more, you know, more benefit at the front end without the inflation. Might be more economical, but it's might not be as safe to do that. But
yeah. So again, you know, I talked about the activities of daily living, but cognition is a big thing. Everybody, it doesn't mean you have to have a dementia diagnosis. It can just mean that you have, you know, regular aging issues. They have all kinds of names for it. It doesn't have to, you don't have to have an Alzheimer's or a dementia diagnosis, but you may be having some issues with memory and need reminders to stay safe in your home. And a caregiver can do that for you. So I think it's up to the physician to make those recommendations of where the safest, you know, place. Certainly if a person has behavioral issues, they're really acting out, or they're wandering, they're getting out of the house at night, don't know where they're at, knocking on neighbors' doors, that's certainly maybe a placement issue where it wouldn't be safe to keep that person at home, even with, you know, there's a lot of gadgets you can get to lock from the inside, alarms, things like that. But you just have to gauge safety. And with cognition, I think that's the biggest thing. A lot of times clients will say to me, well, I can still take a shower without falling. Well, you can, but sometimes you get confused, you know, or you might not shower, you know, as often as you should, and you need just those verbal reminders. So families really, I caution families to really look at that, because that can be a deal breaker whether or not they approve a claim or not. If you add that cognition component in, and it's supported by the physician. Physicians do mini mentals all the time. If they score, you know, 4 or lower on some of those scores for the mini mental exam or the slums, the acronym for the test that they give, you would qualify. So.
A question from the attendees here. They were talking about facilities that have all levels of care. I guess they're referred to as continuing care communities.
Right.
With the independent living areas, and maybe this varies from one facility to another, do they permit home care coming in?
Yes.
And if they do the policies pay in that kind of a setting?
They would look at that as a you being in your own home. That's how they look at it. Medicare looks at you, even in assisted living, Medicare looks at assisted living as your own home, actually, because if you had therapy coming into your home, into assisted living, it would be under Part B. So that's how the long-term care industry looks at it as well. So yes.
Okay.
And often too, the assisted living piece of that, some in the larger like CCRCs, like you mentioned, like big campus places that have all levels of care, you don't need to worry about that. But some of the smaller assisted livings, maybe that are just a freestanding assisted living, some don't have nursing 24 hours. They will only have a nurse there during the day to give meds, that type of thing, and maybe 8 to 10 or whatever it might be. Some policies do not allow you, would not approve a policy at a facility like that. Most of them want an on-site LPN or RN 24 hours. It doesn't have to be in the assisted living. Maybe they're over in the long-term care side, but the nurse is available. So you have to check that with your policy too, what those requirements are as far as an on-site medical personnel. Because if an RN or an LPN isn't on call or excuse me, not on call, but isn't on site 24/7, that policy may not work with that facility. So a lot of times if you're counting on using the long-term care to defray your costs in that facility, you want to make sure that facility qualifies with your long-term care provider.
Great. Another question came in, and it relates back to, I guess, the daily benefit or monthly benefit. The question was, if somebody started a benefit but then improved, how does that affect the total policy value?
I'm sorry, you said if they started a claim and it didn't get approved?
No, it got approved and the payments were made, but they improved in their health. So they didn't need the policy benefit. Do they have, do they go after a claim a second time?
Sure, yeah. When you initially start your claim, they will tell you, oh, you have $369,000 on this policy. Maybe you use it for 6 months and you use a big chunk, 100,000, whatever it might be. And you decide, listen, I'm pretty independent. I'm going to back off. I don't need, to be in assisted living, or maybe you move to your daughter's house and with them helping you, you don't need it. You can stop that claim. Now you will start paying premiums again to build up that dollar amount. And all they do is deduct. It would just defray from your overall giant amount.
Okay.
Yeah, absolutely. You can come on and off. A lot of people do that.
Here's a good question for you, since you're in the care management business. And I know you help people with developing plans of care. You help people maybe advocate for them with doctors, particularly if they have children out of town, maybe older adults. Do these policies pay for any services of a care manager?
Sometimes they do. We have been paid through there, but it's usually for evaluation only. Most of these bigger companies have their own RNs then that will come out, meet with the clients and talk to them to make sure things are what they say they are. Recently, they do it by video. I usually like to be with the clients when we're doing that, especially if it's a cognition situation, because if a client just shows up on a screen and they say, can you take a bath by yourself? Oh, sure, I'm fine. Some people will even say, oh, I drive myself to the beauty parlor, that type of thing. That there's no way that nurse can know that that's really not the case. If they're poor historians because of a cognition issue, that needs to be told ahead of time, not when that interview takes place, or you're going to get denied.
And I think I asked you this question before we even came on the line, but what has been your personal experience with these policies? We get complaints. I've paid this insurance all my life and I'm really having trouble getting a claim through. Just kind of interested in your personal experience or any recommendations for improving the payout from these companies.
I think you have to do your homework ahead of time. A lot of companies, if you've been in the hospital, boom, that's day one. A hospitalization helps, believe it or not. If it's not a hospitalization, maybe they just got a cancer diagnosis because they had a complaint or something and they found cancer because of the complaint. They weren't really hospitalized, but now they're being treated. I think the communication with your physician is crucial, because you can even appeal a denial. And if the doctor is willing to go to bat for you and say, no, the cognition issues are strong enough that it affects, 4 levels of care, they need somebody with them in that home. Or no, I've had physicians say, no, they need to be out of that home and in an assisted living, in a facility that's a locked unit maybe, because it isn't safe for them. The physicians have determined that as well. So I think in cases like that, you have to have a good rapport with the physician who's going to fill out your forms and make sure you'll get it's a packet of information that you get from them. It'll include stuff for the facilities if you're using it, stuff for the caregiving company if you're using a caregiving company, and for the physician either at the facility or your primary care physician.
With clients, I've run into a couple problems. I was going to mention this to see what your experience was, Marcia, and maybe it's kind of a warning to people as well. But again, there's many companies at one point that issued these policies, and they're contract language is different. And so I've had some problems where a client wants to go to a certain facility, but because of the requirements of the policy, they've run into a problem. So generally they allow you to go to any licensed or certified. Have you run into problems in
The
that
biggest
way?
issue that I've had is the smaller facilities, the more private ones that don't have a medical person there 24/7, if it's a higher level of care. Now, having said that, there are those private homes that will take dementia patients, maybe 4 or 5 homes, and there's a series of homes that do that. Typically, they have an RN that is on call 24/7, and long-term care policies will accept that. But again, you have to do your homework. To start this policy, you have to dot the I's and cross the T's and make sure what you write down as far as what's happening is true, and don't gloss over it. You know, the reason you're thinking you need this is because you probably do. And just, you know, you want to present the worst case scenario. A person might have good days and bad days. I always tell people what you want to write and what you want to portray to them is your worst days, because that's when you sit there and can't get off the couch and say, I need help here. You know, on a good day, I can do it. On a bad day, I can't. But think about your worst days or their worst days and project that to the policy so that they know why you need this help.
We're starting to reach our 2:30 hour. I do have one other question that just came to
Sure.
mind, and that is adult daycare has become a more important option for people. What's your experience with the policies covering that kind of a benefit?
I'll be honest with you, I haven't had one policy covering that. Typically, the VA, if someone is hooked up in assisted living with the VA or has used the VA aid and attendance, they'll cover it. But I haven't had anybody try and use a long-term care policy for payment at adult day.
It could depend on the company. I've actually had 3 or 4 clients get paid. Now, you know, a lot of these policies came out in the early 80s, maybe even before that. So there's been a lot of progression in coverages. So it could highly depend on the
I can
policy
see
itself and
that
the time period.
it could fall under the home health arena, because they're keeping the person in their home. They're just going out for the day. And I could see the policy accepting that because most of those places do have an RN that is giving medication throughout the day. So yeah, I can see under the home health benefit area that would qualify.
Well, Marcia, again, frustrating in the fact that we run out of time before always getting the subject totally explored. But I know you're going to be back with us a number of times in some of the Financial Fridays, which will have more time to even get deeper into some of these subjects. So thank you so much for joining us again. I appreciate everybody tuning in. Please check the website and you'll see other programs of this nature and many other topics as well. So we'll close for now and hope everybody else has the very nice rest of the day. We'll probably keep the lines open a little bit longer just in case some last questions come in. But thank you all, and we'll have you join us again real soon.
Thank you.